Tao Wang. Tao is head of China Economic Research at UBS Securities. And you were nearly spot on here with your prediction. I think you were saying 9%, so you were a bit weaker than the consensus.
Yes.
So do you see this sort of fall in GDP growth continuing?
Yes, we do. I think the weakest point is actually exports. In September, we saw exports slowing, and we see that continuing. So we think that's the main driver why China's growth is going to slow down in the next couple of quarters.
And, of course, that's down to what's happening in the global economy and uncertainties there. But we seem to be just stepping away from the brink when it comes to the U.S. economy, don't we?
That's right, yeah. The biggest worry right now is Europe.
Yeah, so where do we go from here? If I'm talking to you, let's say, in the first quarter of next year, what's GDP growth going to be like in China?
Well, we're actually pretty worried about export outlook going forward. So we're expecting actually Q-on-Q to be below 8%, close to 7%, and year-on-year to be probably the weakest since the crisis at 7.7%.
I mean, we can blame it on slowing growth in Europe and the US, but China's got a lot of neighbors which are getting in on its act, haven't we?
Sorry?
I'm saying that there are other places where cheap goods can be made now, which of course means that China's exports have a lot of competition.
That's right. Well, in the lower manufacturing sector, the labor-intensive sectors, China's having increasing competition. But I would say at the moment, I think the overwhelming driving force is still external demand rather than, somebody else is taking China's share. Okay,
well, exports, one concern that you have there. What about the house price situation? We got that data as well. 69 out of 70, 3% plus growth in house prices in Shanghai.
Well, I think the housing price growth certainly have slowed. Last month it was 70 cities, all 70 cities have seen price increase compared to a year ago. Now some cities start to sort of getting weaker and see price decline. And this is very much related to the government's tightening measures, trying to press developers and trying to restrict the purchase of home buyers. I think that policy is going to continue, so we do see weaker sales and weaker starts in the months to come. But the good thing is that the government is also pushing for social housing construction, and so that will support the overall construction activity.
I'm trying to find actually sales here, what happened with the amount of property transactions. Now that's very important, isn't it? But I can't drill down to that data right now. But tell me why it is important, because we also have, of course, so many homes which are empty in some of these big cities.
Well, so with the prices in China, the data is actually very hard to interpret because it could be a different mix and in different locations. And so sales actually for developers, that determines the volume and determines how much they're going to start new projects. And construction for the economy is very important. So I actually pay a lot more attention to sales volume and housing starts than just the prices. Yeah, and of course you mentioned something key, construction, which brings me on to investment spending. Now that's as a proportion of GDP has been falling because of the conditions, credit conditions. But it's got to stop at some point. Nira Rubini saying that it's the biggest threat. A drop in investment spending could actually mean, well, saying that inevitably with the amount you've had, that you'd have a hard landing sometime in the next 3 years. It's always hard to predict the timing of the hard landing, isn't it? Well, with the investment spendings, we got the September numbers still pretty strong. I would say this year the weak points in China's investment is infrastructure. We have all seen high-speed rail, local government spending coming down, but the strength was that corporate capex spending was very strong, and housing sector is still being supported by both the commodity housing sector as well as social housing. Going forward, we think manufacturing investment is very vulnerable if export slows. Inevitably, as we go forward, we do think China's trend growth is going to slow and investment growth has to slow from this very high levels. But whether it's a hard landing, I think that's very hard to call. We certainly do not subscribe to that.
Tao, thank you so much for joining us.